Want to retire early? Here's how real estate makes it possible. Hi, I'm Jeff Sibel, real estate broker and certified financial planner with over 40 years of both real estate and stock advisory experience. You will learn how to retire early with less money invested with real estate, and I will compare and contrast the success of real estate investing to stock investing when planning for retirement. Today, I'm going to show you a better, safer way that has worked throughout history. Stock investors, you will learn why the stock market does not provide high historic returns, which leads to retirement planning failure. And if you're a real estate agent, pay close attention. I'll show you how to use this knowledge to build trust. Set yourself apart in your market. Become more than just an agent. You become a wealth agent for your clients. You will see for yourself that if you become a real estate investor, you can retire early with less money invested. To retire early, I have a few questions for you. Which would you rather have? $500,000 increasing at about 5% compound rate for 25 years, worth about $1.7 million? Or $100,000 increasing at about 5% for 25 years, worth about $373,000. Believe it or not, stock investors since 1900 have chosen to have $100,000 increasing at about 5% or less for most 25-year periods. It is true, sadly, the vast majority of stock investors cannot retire when they want and the way they want because they're saving and investing the wrong way and they don't even know it. Let's take a trip back in time to show you how and why real estate investors can retire early with less money invested versus stock investors. First, I want to show you how real estate has increased for the last 80 years, enabling real estate investors to have very predictable retirement planning results. Highlighted in yellow are the historical increases in values of the median U.S. homes by decade. Do you see that in 1940, the median value of a home was $2,938? From 1940 to 2020, real estate values have consistently increased from $2,938 to $329,000. Real estate has increased at over a 6% compound rate for this 80-year period. Now highlighted in yellow are the compound growth rates for each decade. Do you see how real estate has usually increased each decade by about 5% or more in 5 of the last 8 decades? This is a huge deal from a wealth building and retirement planning perspective, and we haven't even spoken about how leverage magnifies the returns that real estate investors receive. In addition to the high predictable increases over time, another reason why real estate investors can retire early with less money invested is they can put a small amount of money down on a large amount of real estate, and the increases on the amount of real estate owned and not on the amount invested. Let's talk about the power of leverage and why real estate investors' portfolio values and incomes are usually significantly larger than stock investors with the same amount invested. The median home value from 2000 to 2025 in the United States increased at over a compound rate of 5%. Here's a wonderful example of leverage. If a real estate investor put 20% down or $100,000 at a 5-to-1 leverage ratio, they could purchase $500,000 worth of real estate. In the first year alone, if you have $500,000 worth of real estate and it increases at a 5% rate, then the real estate increased by $25,000 on an initial investment of $100,000. This is a 25% return in the first year alone, assuming all other things being equal. The median value of real estate in the United States increased at over a 5% compound rate from 2000 to 2025. Therefore, $500,000 worth of real estate increased to almost $1.77 million after 25 years. Key point, the increase is on the amount of real estate owned and not on the amount invested. Yes, real estate provides predictable returns and high growth when saving for retirement, but let's now talk about the income, the high predictable annual income of real estate in retirement. To keep things simple, let's assume after taxes, insurance, property management, that your real estate portfolio provides annual net rental income of 5%. I know that an annual net rental income rate of 5% may be low in most areas, but I want to use that rate to be conservative. And this real estate portfolio could provide $88,000 of retirement income. It even gets better because real estate values and rental incomes increase over time to maintain your purchasing power and lifestyle in retirement. Investing in real estate creates financial freedom. To fully appreciate the advantages of real estate investing, we need to compare it to stock investing. Let me show you why most stock investors since 1900 were forced to delay retirement. So why do people put their money in the stock market? Because Wall Street has convinced stock investors to think they're going to receive high returns of 9%, 10% or more. Fact, for over a century, Wall Street has intentionally misled stock investors into thinking the stock market provides high historical stock market returns. Take a look. When you Google, what are the average returns of the stock market? Do you see that most periods they're trying to have stock investors believe that the stock market provides returns of over 10%? Take a look at these different companies that advertise that the stock market averages over 10%. In my YouTube video, Wall Street's Dirty Secret, I explain how Wall Street creates high, fake, average returns that do not really exist. Wall Street wants investors to believe the high stock market return myth. Here's the reality. Let me show you why Wall Street needs to misrepresent the actual returns of the stock market. Do you see that before and after every good stock market period, there is a bad stock market period? And I call this the seesaw effect. These bad stock market periods in red are one of the many reasons why stock investors cannot retire early with less money invested, because they do not get the returns that they were expecting. And they usually need to delay retirement or risk outliving their money when they need it the most. Highlighted in yellow on the right-hand side are the actual low 25-year returns of the Dow Jones Industrial Average from 1900 to 2025. Can you see that they're not that impressive? Now I want you to focus on the last 25 years from 2000 to 2025. It provided an unimpressive compound return of 5.41%. Do you see that 7 out of 11 25-year periods that the actual compound returns of the stock market were about 5.5% or much less? For the last 125 years, there was only one good stock market period with real compound growth of over 10%, and that included the 1980s and 90s. Most of these returns are not that impressive because the increase is only on the amount of their investment. There is a terrible human cost to all of these bad stock market periods for stock investors because they must keep working to pay their bills or risk outliving their savings if they do retire. Now let's talk about other major problems for stock investors. Stock investors cannot safely leverage a stock account. Therefore, the increase is only on the amount of their investment. $100,000 only controls $100,000. This illustration looks very impressive since 2009, but how well have stock investors really done for this 25-year period? If stock investors put $100,000 in the stock market, the Dow, or the Dow Jones Industrial Average, and receive 100% of the increase in the Dow, it would have increased to only $373,000 and change for this 25-year period. Now let's talk about how $100,000 in real estate does not equal $100,000 invested in the stock market. Remember when I asked you the question at the beginning of the video, which would you rather have? $500,000 increasing at 5% or $100,000 increasing at 5%? The answer is clear. Now let's talk about income from a stock account. What is dividend income? Dividends are payments of income from companies in which you own stock. Most importantly, what is net dividend income? For stock investors that own mutual funds, net dividend income is the income that is left over after management fees, expenses, costs, and commissions are deducted. This is a huge problem for stock investors. Stock accounts provide very little income. If they received a 1% dividend income, it will only pay about $3,700 annually. Think about that. Dividend income on stock account generally isn't large enough to be able to pay the bills. So let's talk about investment real estate. Here we have two different 25-year periods. Starting in the 1990s and 1980s, you can see that real estate investors had larger portfolio values and incomes were substantially more. It's difficult to compare apples to apples when talking about real estate investing versus stock investing. Real estate has costs, fees, expenses, and responsibilities that stock investors do not have. But when you factor in these differences, real estate investors have outperformed stock investors for over 125 years. Here we have the 25-year periods starting in the 1970s and 1960s. You can see that real estate investors enjoy dramatically larger portfolio values and significantly more income. Here you can see history repeats itself. These 25-year periods beginning in the 1950s and 1940s enjoy dramatically larger portfolio values and significantly more income. Here we have the Great Depression. Let's look at the Great Depression. Housing prices decreased almost 50% from 1930 to 1940. But still, real estate investors for these two 25-year periods did significantly better than the stock investors in both portfolio values and income provided. And last but not least, here we have two 25-year periods, 1910 and 1900. Please take a look at how well real estate investors once again did compared to stock investors. If you're a real estate professional ready to stand out and totally differentiate yourself as a real estate authority, please join the wealth agent community of agents, brokers, property managers, and lenders who are using this training already to have powerful new conversations with their clients using all of this valuable information. These are the PDF handouts, mailouts, and email attachments that you will find in our training. Each PDF is designed to be conversation starters, rapport builders, prospecting tools, and you can present them on the phone in face-to-face meetings, small group, and large group Zoom meetings. You can use this great content for your Instagram, YouTube channel, or any other social media. It's entirely up to you. We also have bonus content, PDFs, booklets for you to demonstrate your expertise and authority on all things related to real estate. If what I'm saying resonates with you and you're tired of chasing clients and are ready to start creating clients, we need to talk about winning with wealth workshops. These PDF handouts can be combined for your wealth workshops to help you build credibility and authority as a real estate expert. Please go to wealthagent.com and get your new designation and certification badge today. If you found this valuable, please like and subscribe to my YouTube channel and share it with your friends and colleagues. And thank you for watching.